For that. So now, well, I'm focusing on Jayswal Neco. And remember, a week or so ago, we were on CNBC-TV18 and highlighted this point, that the ARC had held a substantial stake in the company and they've gradually been reducing that stake. As of June, they held close to around 25 crore shares in the company. I'm looking at the BSE data and the NSE data that they normally disclose on a day-to-day basis. And the cumulative is they have sold roughly around 19.5, around 19 crore shares, very, very roughly is what they have sold as per the large trades. The buyer yesterday was quite encouraging because otherwise you've been seeing a lot of selling, but no notable buyer's name has turned up. Now, in yesterday's trading session, post we saw a large trade, and post that we understood that Shubham Capital Private, that's the company that has gone ahead and bought close to around 53 lakh shares in the company. It's a very, very small amount, but the significance of this is that Shubham Capital actually is the promoter entity of Shyam Metallics. It could very well be just a strategic investment, but the street is excited that the part of the promoter entity of Shyam Metallics has gone ahead and bought 53 lakh worth of shares. And just looking at today's volumes, it's massive. Out of those 5-6 crore shares that were pending, the street is sensing that maybe, in fact, bulk of this ARC clean-out trade has happened. That's the sense. Operationally as well, very quickly, the margins, just take a look at the improvement. From around 11%, it's improved to around 19%. So good-looking screen out there. On a quarterly run rate, they were doing 150, 160 crores of EBITDA. That's moved to around 315 crores odd. How have they managed this? 100% of their iron ore comes in from captive sources. They've undertaken some modernization and capital repairs as well, which is definitely bearing fruit. And they've refurbished the blast furnace production, which has enhanced capacity and production as well out there. So operating leverage is playing out. So it's not just the operational performance that is improving. The interest cost as well has been coming down from around 150 crores that they were paying on a quarterly run rate. That's come down to around 120 crores because the debt was at more than 3,300 crores. That's come down to around 2,500 crores, or in all probability, there'll be further reduction in the coming quarters as well. So ARC overhang getting cleared out. Operationally, things are improving. The debt in the books is reducing as well. So what do we track from here on? Can they reduce debt further? Currently, they're borrowing at very elevated interest costs. So that's going to be important to track now that the ARC overhang will go out of the way. And how much can the FY26 EBITDA improve? Last year, they did south of around 1,000 crores. Can they do a much better number this year? That's going to be important to track. But we had alerted you last week that this ARC selling is gradually getting absorbed. And today, the stock is locked up in upper circuit. Post-market hours, we'll have to track the large trades.
Thank you very much for that.